Welcome everybody, my name is Mike Hamilton from Trade the Easy Way, and it's just coming up 12:30 London time on the 29th of April. I was going to show you this is CPI Capita in London. I bought this, was it 22, 23, traded up to about 22p, can't remember, I traded up now. Yeah, I think I bought it here in 23, traded up to 22p and then left it, and this just looked dead in the water. There's no, as far as I can't work out what's gone on with this, but we've shot up from 12p to £2 overnight. No idea why. It looked dead in the water. Volumes were beginning to look better here in March. Anyway, it just shows you just how random markets are. They are completely random. That I would never have predicted that Capita would have gone anywhere near that in that time. Alright, so just goes to show, anybody who's in it and stuck in it, well done. Also, the other thing is, it's good not to have limit orders for exits, because anybody who had a limit order in there for 20p or something would not have benefited. So that's something to take from that as well. Let's just let's start with the FTSE. So this is the weekly chart. So we had the Liberty Day drop, which went right down there at 75.30 area, and here we are just tapping into May 24 highs. So we had 3 decent weeks up here, so I wouldn't be at all surprised to see that come down to 83.40, maybe 83, and then if that holds, then we punch through 85, then we're going to see 88, 90, 9,000 pretty quick. However, just be careful, because this is a very, very important area. If we end up with a head and shoulders, so shoulder, head, shoulder, if this can't break through this 85 and struggles and closes lower, this could so easily come tumbling down, because this could work out to be a 1, 2, 3 wave correction. I'm talking not necessarily hours and days, but days and weeks for this decline to happen if it does do that. But just be very, very careful with these markets. They're very volatile, very touchy, and prone to when certain political leaders say certain things. Talking of which, let's look at the Dow on a weekly chart. So similar story, we saw a 3-wave corrective move down to 36,500. Decent bounce, closed lower, decent bounce. So we're just in an apex here. What do I mean by that? What I mean is we have all this resistance above and all this support underneath. So whichever way we come out of this is going to give us direction. So just the FTSE is in a critical position. That 40,250 area is important. If we knock into that and close lower, then this could so easily come down to 35 and lower. But if we sit up stay above 40,000 and get through 41, we could go back to 45. Alright, so let's put the average on here. If we look at the 50-day average, see, we're not above the 50-day average, and technically any market that sits below a 50-day average, you should short the highs. The trend is to short the highs. So to touch that 50-day average would be just over the 41,000 mark, 41,250 at the moment. So that could be quite key. So we look as if we got more momentum to the upside, but the RSI has come off the lows and just barely hit the midpoint, So we are very fragile here. Yeah, the next leg could be, if we can't get through that 41.5, could see this get another leg down. Alright, in the meantime, let's look at some stocks. I'll tell you what, let's look at gold. So, I've had an incredibly weak dollar. We'll look at that in a minute. So the gold has picked up. This weekly looks like a sell signal. So if we, I think that the gold is due a pullback. We're not divergent. We are still very bullish. We're sitting up, but that lower close. So the market went right up to 33,500 and pulled right back to 33.20. So any pull back into 3,500 and a sell signal, a lower close could see that drop right back to 27.20. And if we pull back and engage with this moving at 50-day average, then that's a potentially good opportunity to get in for another leg up. There's the daily. So the last time we touched the 50-day average was down here at 29.60, 29.58, and we pushed up to that 3,500. So we're consolidating. So I still think there is some upside, because if, oops, didn't mean to do that. Let's get the pen. So we have pulled back to the 50-day average. We have done a couple of two-wave or three-wave move up to that high. We pulled back, we're consolidating. So if this drops into the 3,000 mark, well 3,000 is right down here, we drop into this 3,300 and hold. I think we can get back up to those highs, but I'm then looking for this to correct. If we close underneath 3,300, then we're going to correct pretty quickly, at least to 3,000, if not lower. So we are still bullish, the dips are still buyable, but just be careful because it is very toppy. It's had a good run, and I think soon we will start to wing our way back. Now what could drag that back is this, a bounce in the dollar. So here's, we've been coming off ever since January this year. We're at an extension down here at 97.66, and we look as if we could pull back up at least into the 102 mark here. So if I'm right, I've got non-farm payroll on Friday, so shoulder, head, shoulder. We start closing above this parity, and that could really start to pick up and reclaim some of these losses. That could drag the gold down and drag the indices back because of the divergent relationship that is the norm in these. Right, stocks. So the BT looks higher. If we see 168, 65, 68, that's a buy. We look as if we're heading, at this rate, I'm not even sure we're going to see that. A dip to 170, might see it get to 180 plus. It looks as if that's heading for £2. We've got EasyJet. We've dipped into £4. We've just today we've tested 510. Volumes are improving. Any pullback to 480 is reconnection with 50-day average. Could see that pop back to these highs. I'm looking to see if this can break this trend line. You can see why it's been interrupted at 510. Looking for this to come back, have another run up at this trend line, and if we break, I think that could be a very powerful break up. So again, shoulder, head, if we create a shoulder here and we hold, I can see that breaking up and potentially going to find £6 plus. Close under this 480 and this could fall over. Cyclically, this is the normal for EasyJet. They lose money over the winter. They increase their ticket prices and fill their planes over the summer. They are expanding into travel agency and all sorts and packages. So if that can get up, if we pinch back, 575, 580 is a major resistance area. If we come and attack that and win, we should see 625 and maybe 690, £7 on EasyJet. New one I've entered is Polar Capital. Liked this low here. So we're doing a double bottom from October 23. Last time we did that, we wouldn't have found £6, and we're currently 388. Still time to get in. If we close up here, I think 350, 370 is still a buy. You're going to have to get your stop under 344 and then see if we can climb. Prudential has done really well. Huge drop into that, all that support. So we touched 850, dropped to 685, and here we are just holding £8. If we get a lower high and start closing under 780, 775, watch out. This could do a deeper retracement. But in the meantime, pullbacks are viable, and you could even see 750. If we see 750 and hold, that could then come back and break these highs and take us into 920 and £10 on Prudential. And this is a speculative one, IQ. Take a bit of heat on this one. IQE. It's speculative, so I've got in small size, waiting to see if we can close above 10. If we can, who knows, we might even wind back to 18 plus. But we were down to 8.5 November last year. I went to 18, and here we are playing around with these lows right now in IQE. And moving on, let's get to my list. QQ. I think QQ is back in play. This is I think this is a bullish head and shoulders. So shoulder down there in Feb, head down there in April. If we start closing above £4 on QQ, Quinintech, I think we could go back to £5, £5.50. Just stick around with the financials. Legal and General, sitting up but struggling up there. Any pullback to 230, we're currently 237. If that holds, then we could push up back up to the highs. Barclays sitting up. Any pullback to 280 I think is viable, to see if we can go and push through 320. Pension V has had a good run. Any pullback to 145 is a buy. AJ Bell in the same sector. So recently saw 437, any pullback to 408, £4, and any subsequent breakthrough in that resistance could see it go to 460 plus. If you pinch back, that's potentially a big bull flag on AJ Bell. This is Schroders. Pulled out of this apex, any pullback to £3, 315 is buyable. Where's Close Brothers? We can find Close Brothers. Here we are. This went down to 248. I was looking for a deeper pullback, so I'm not in this. If I see 270, I will get in on Close Brothers, looking for that to go back to £5 plus. Let's look at commodity related, Rio. Very, very similar chart patterns. Any pull back to 44.60, could see that pick up. I haven't got any more, for some reason I haven't got any more commodity related ones there. Wise, these are payment transaction guys. Any pullbacks 9.45, looks higher. Pay, same sector, similar pattern. Now, Renew Holdings. This is broken up from this channel. Any retest of that channel at 650 I think is viable. I wouldn't chase this one. Once you break out of a channel, you tend to get a full blown retest. So watch out for that on RNWH, Renew Holdings. We looked at BT, there's Vodafone. So these are very, very similar patterns. A deep drop in Liberty Day, climbing back up. Volumes, the Vodafone is tailing off in volume there, so be careful. But otherwise, if that can break that little resistance area, so I think we might see 69.70 again. If we hold, I think we can see 77.825, and possibly if it really catches a bid, we can go and see 90 plus, 90 a pound on Vodafone. It's a bit of a slug, this one. We've seen a lot of selling into the highs in May 24, September 24, March 25, so it's good on pullbacks, but will it break? Who knows? We've seen Capita add a naught on the end of its price, so why shouldn't a good solid stock like Vodafone? Alright, so I'll leave it there. I hope that helps, and I'll update you as the week gets on.